And we are back with the Real Estate Reserve podcast, and our guest is super nervous to come on, but that's okay.
Is he?
Yeah, I think he is because, he's a good real estate investor, but he's never done a podcast, so we're going to pop his podcast cherry, so I'm super excited. And, he's coming on the #1 real estate podcast show.
Real estate investing podcast.
Real estate investing podcast show. I've decided that I will manifest this with you, and we will become the #1 real estate investing show currently in Maryland and soon to be the rest of the country.
That's right.
Yeah, so.
That's right. All good things. All right, well, why don't you introduce our guest, and we'll start from there.
Yeah, so I brought my good friend in, Ryan McLeaird, from San Antonio, Texas. The guys in Texas, they always think bigger, so I guess we'll find out what he's thinking. So, Ryan, you want to introduce yourself, kind of who you are and where you're from?
I'm Ryan McLeaird from San Antonio, as you said, and I'm a quarter cup of coffee in, so as soon as, this will get fired up a little bit more as that goes down. But, I've started real estate investing in, I don't know, a little bit of background on me. I was a loan officer, from like 04, 03 to 08, and those were wild times. I can tell you that much.
Yeah.
So,
residential or commercial?
And they're done that.
Yeah, all residential. Yeah. So I used to work at this bank, and I was in the military. And then I got out, and then I was kind of going through college and working at this bank. And this younger guy, he's probably like 35, kept coming in with these checks, and he drove this nice Mercedes, and he was depositing like $20,000 a day. And I'm like, what? Dude, what is going on? So I asked him, and he's like, hey, get out of this bank. Come work with me. I was like, all right. I go over, legit boiler room this guy's got going on. He's mailing out thousands of mailers a day and refining people from 8-9% rates down to 5%.
Right.
And if you take somebody that's been paying their mortgage for 15, 20 years or 15, even 10, I don't know, and you put them back on a 30-year and take them down to 5, they're like, so it was just like shooting fish in a barrel. It was crazy times.
It was easy.
It was nuts. And so we figured out what happened after that in 08, 09. And so anyway, long story short, I went and did corporate until 2018 and then got out and started doing full-time real estate.
What did you do for corporate after lending?
So after lending, I kind of worked my way up in the retail. I really liked, merchandising and marketing and whatnot. And so I ended up being a buyer at the Circle K convenience stores. And they're a big monster. And, them and 7-Eleven kind of own the world on convenience stores. And
right.
So, but I bought all the tobacco products for them for a while. So I was in charge of killing people, I guess. I don't know. Because, it was like
so you had to source. You had to find. Yeah, you were in charge of killing people. I get that. But you had to source like the vendors that were then supplying. So you would go to Marlboro or Newport and say, yo, I'm buying this many.
That's already been established since 60, 70, 100 years of cigarette smokers out there. But, basically, I was in charge of all the pricing. I set all the pricing across all the stores, and so I was always looking at elasticities and if I raise this 20 cents, how is that going to affect demand? And so promoting it, all the signage you see up at every convenience store, I was in charge of all that copy, what it looked like.
They had to get a man from Texas to do that. I think it's the only appropriate place left to smoke cigarettes.
Agreed. Let's talk about Texas before we talk about real estate because
they got the worst football team in America. Just going on the limb.
All right.
Sorry.
So without looking at a map,
Cowboys.
Can we explain the different cities in Texas? So San Antonio, that's south, right?
South Central, yeah.
South.
But there's still 6 hours south of me.
Yeah, my brother was in McAllen, Texas. The
McAllen,
border.
That's 6 hours from me.
Yeah.
What's dead south of San Antonio after you leave the state border?
Mexico.
So that borders the Mexico right there.
Yeah.
Okay. So there's no other.
There's no other major. There's Laredo and Harlingen.
But I thought on the east side that's where Oklahoma is, or is Oklahoma dead east?
Dead north. This is a geography
dude,
lesson.
I'm not that dumb. My God, dude.
Texas.
Louisiana is east of Texas.
Okay.
And New Mexico is west of Texas, right?
New Mexico, just west.
Yeah, El Paso. Our buddy Nick.
I've been to.
How'd this turn into a real estate class?
I've been to New Mexico a few times. I've been
or
to Texas.
geography. Yeah, you were supposed to go to Austin. Austin's dead center, right?
Austin's dead center, yeah.
And then you got Dallas is north and east of there.
Dallas and Fort Worth, straight north, about 5 hours away.
And what's the other? San Antonio,
Houston's
Austin,
about
Houston.
3.5 hours east, and then El Paso's 9 hours.
So
If
what
you-
part of
west.
Mexico is dead south then?
What kind of what?
Like what part of Mexico? Like what city?
There's no. I mean,
There's-
there's
It's just
nothing that you would be like.
wasteland.
Yeah. there's
Got it.
Piedras
So all the good
Negras
parts are like or more west.
Or east on the
Tijuana
coast.
stuff.
Well, Tijuana
That's
south to San
California.
Diego.
Yeah.
But
Yeah.
I'm saying, but if you go southwest, is that a doable part of Mexico?
No, you really
Not
don't
really.
cross the border anymore.
Okay.
Yeah.
Back in the day, you did. Now we fly to Cancun, and
Yeah, so you're going to the coast if you're going to Mexico,
if you're
right?
going to Mexico,
yeah.
yeah. So you don't do. I mean, there's still trade. I mean, obviously
Yeah,
that's
yeah.
huge for trade. So I
Got
mean,
it.
there's a lot of traffic
Well,
goes across the border.
Legal
every day.
and illicit
legal
trade.
and illicit.
Yeah.
Yeah, but
Enough about Texas, unless we talk about real estate
because that
in
would
Texas.
be a political podcast.
All right, so
Talking about borders.
so-
Let's go. I just want to let you know we're sitting in a blue part of the country right now. But no, I think Ryan brought up a really good point to keep this relative to real estate, and we can get into what you're doing, but like your corporate job of like you said you moved product pricing by 20 cents to change profit margins, elasticity, all that other stuff. Do you see any of that stuff rolling over into your real estate investing career? Like stuff that you learned in your corporate, obviously finance, you got a life lesson. We all know the benefits of that. But
yeah,
like
yeah,
from,
those are the biggest things. Yeah, really, and just like how to analyze. So I first came out when I left the mortgage business. I was an analyst, right? And that was my first dig into like how to look at data, right? And so
Right.
the company I worked for collected everything, and so it was a food distribution company, and it's kind of like Cisco or Benny Keith, but
Right,
on a
yeah.
smaller scale. And and so that's one big thing that carries with you forever. Just how do you analyze anything? Now you're analyzing deals, but there I was analyzing sales numbers.
It's perfect for self-storage because that's all storage is really, compared to a lot of other stuff. So your first, you were in residential real estate first, some wholesaling, flipping, rental, stuff like that, I'm guessing. What was the first deal that you did and what kind of sucked you into real estate investing from corporate America?
Yeah, that's a good question. I had left corporate America really just almost at a drop of a hat. I was like, this is because you go in every day, the exact same desk, the exact same people, they're having the same conversations, and it's a lot, you live your life on just drama of what's happening in the office because you're like, how am I going to keep myself, not bored here. So it was just that thing. I was, and I would go to the same, because we worked for Circle K, we had like a mini convenience store downstairs. And so I'd go get the same cup of coffee, do the same exact mix of right. And one day I was just
Every
like,
day's the same.
I'm
Yeah.
just like, this is,
Truman Show.
I just thrive on change and challenge, right? And so there wasn't enough of that going on. So I just left. And one day I went, my brother, he had a small kind of wholesaling operation going. He'd been in real estate ever since. He just basically stayed in. When the crash happened, he was like way smarter than me. He's like, this is an opportunity. When people are running away, I'm going to run in, right? And so he went in and started buying $5,000, $10,000, $20,000 houses, and it was crazy. And those houses nowadays, I mean, they're 200, 300 in the same crappy condition they were in back then.
Yep.
Anyway, so I went in his office one day, and I was kind of brainstorming on a bunch of different jobs that I could do and different things that I was going to work on. I just went into his office. I said, man, what's going on? What are you doing? What is this wholesaling thing? What are you talking about? He's like, look, man, I got these houses all up on the board. These are all under contract. I need to sell one of them this week, and this is the one that's got the most seasoning on it a little bit. Let's call this list. He gives me his cash buyer list. He's like, just start calling. And I'm like, okay. So I start calling, and I don't know. I just educated myself a little bit on marketing the property a bit. And I just was like, what's the property? Where is it? What are the good things? And I called a lady, and she lived in New Braunfels, which is right down the road from this house. And she was like, ooh, yes, I want it. And I'm like, wait, what?
Yeah, hell yeah.
And so anyway, we had it contracted. I think it was only like 20 grand. And I was selling it to her for 45. It was a tiny shack, but it was by a lake, really nice lake. And she saw a vision of like, that's an Airbnb right there. And so she put, she probably put like 80 grand in the thing, maybe 100. And anyway, I wholesaled that thing for $20,000 fee that week, my first week, and my brother like cut me a check for like 12 of that, something like,
That's a nice brother. I was gonna say,
was
what
gonna
did he cut
say-
you, like $1,000?
Yeah, I was trying to figure out what his commission was.
Yeah.
Well,
wait,
this,
so it's over
you know,
50% of the
Well,
profit?
this was before. So this was before we joined a big wholesaling mastermind group
Right.
and figured out like how to pay acquisitions,
Yeah.
dispositions, and stuff like that. But anyway, I was like, wait, I just made a few phone calls and we made, the company made, 20 grand like in no time. He's like, yeah, that's great. And so anyway, that really caught me the itch. That was a long story,
Yeah.
long answer to your question, but
Catch everybody's itch right there. I mean,
Yeah, I think everybody's first deal, it's kind of like going to the casino. I always talk about the first time I ever played craps. This guy rolled for like 3 hours straight. I had no clue what was going on, but I had a grand old time, walked away with like a few $100, and I was like, man, that was the best thing ever. You're always chasing that high. It's like, it's the same thing with real estate, dude. You do your first deal that's right, or things that go right about it that you live, that stay with you, whether it's monetarily, just executing the deal, whatever it is. You're like, man, I love this, and I got to go back in for more.
Well, it's funny that I just thought of this as you're talking. That's a good point, because any real estate investor who's still kind of in the game or in the mix probably did very well on their first deal, because if they didn't, they probably like, screw this, real estate doesn't work, I'm out of here. I mean, that's not
Well, our
always the
buddy,
case.
think
I
about
hope
our buddy.
that's not the case
Yeah.
because
But still,
there's-
like, that's what kind of sucks you in, the dollars and cents. It's a lot of money. I mean, also, when you're small or you're a little operation, you don't have a lot of overhead, right? You don't have a lot of expenses. So, like, the first deal we ever did was a wholesale deal in Philadelphia market, which is, kind of where Ian lives, like 2 hours from here. It was random how we were up there. We made $30,000 on the first wholesale deal because knew somebody, they were distressed, knew somebody else needed a deal. And I mean, it was an anomaly, right? Like, that's what it was. So there's lots of hurdles after that. But I think a lot of real estate investors in general kind of follow the path of like, and again, things change depending on what market conditions you're in. We've been in a really good market condition for a long period of time. So a lot of people kind of can, I don't want to say luck their way to, but hustle their way through it.
Yep.
But I know a lot of folks, they'll do really well in their first deal, and then they'll be like, oh, I just have to duplicate this, and it's not that easy.
Right.
And then they're down here, and then they climb up, and because they put real processes in place, and they actually have a real system, and they know what the hell they're doing. They don't just luck their way through
That's
it.
a typical life cycle,
Yeah.
I think, for a
Yeah.
lot of folks.
And I would ask you, you said that you guys paid for a mastermind or whatever, some sort of coaching. When you started to come up with like a legit system that they explained to you, did you guys notice a difference in profit margins or cash flow as you made it maybe more of a serious? It sounded like your brother had a pretty serious business going on prior to all this, but it sounds like you put systems in place.
Systems and processes, yeah.
What did that change
make a
look
big
like for
difference.
you guys? Was, I mean, net benefit, right? Like you're sitting here today, but how was that process of going from one-man band, all right, you and your brother one-man band, to a full-blown process?
Yeah.
Like, what were the good and the bad of that?
Well, the good is that, yes, it ramps it up, and we went, so I don't know, it was like August of 2018, and it was like a month after I left my corporate job, and then he had already joined up with this group, barely. He just barely signed up. We went to their kind of big powwow group, out in San Diego, and that was in September, I think, and that was just like where you get the fire. You're just
Yep.
like, okay, everybody, you're seeing all these folks that are making it happen, and they're just regular people, just like us, you know what I mean?
Right.
Yep.
But they follow the steps and they do the process. And so in 2019, we did close to $1 million in wholesale fees, and that was adding people, having dedicated acquisitions people, having dispositions, the whole setup, people answering the phones, marketing going out like clockwork every single month. We were just doing direct mail for the most part. And so once you set all that up, yes, it starts flowing. But then the downside of that is like mo money, mo problems type
Yep.
of thing. You know what I mean? Because then you're starting like, man, we got these people. We got these other,
You got
it's just-
responsibilities,
You're not
right?
just one off in a deal here.
Yeah.
I mean,
Right.
as you grow, your margins are always going to get lower, unfortunately.
Right, and so you're looking at all these metrics, and you're just like, is it really worth it? So 2019 happened. That was a great year. 2020 Q1, we had big goals. We had all these things, and
Yeah.
it was great, and like we had a ton of deals on the board, and then March 15th or so happened, and
Every state but Texas and Florida decided to flip the country over. Go
well,
on.
but I know, I mean, everybody kind of shut it down.
Yeah,
and,
they
and,
sure did.
And the capital markets shut down for a while, and
Yep.
all my investors that had, I had all these deals assigned, and they all dropped because
Yeah.
everybody's like, nobody knows what's
It
gonna
was
happen.
unknown for about a month, though.
Yeah.
Right? Was that how long it took, or longer?
It took a little longer. Yeah, it took a little longer. I was trying to just massage sellers, and I had to back out like most of those deals because we
Yeah.
also were like, well, we don't know what's going to happen exactly.
Agreed.
And
Unknown is scary.
because it was coming back to a point where, I mean, prices were just going up, and you're like, well, I'm already kind of overpaying for this, but I was going to make $10,000 assignment fee. Cool, fine, but it's still not one of those banger deals where you're like, I'll just take it down, not a
Yeah.
big deal. So anyway, that's what happened. We kind of backed off of that whole model after only 1 year because of COVID. Kind of made us shift our minds.
All of those deals, though, if you kind of could float it, let's just say, for like 90 days,
Oh my God,
you would have made a fortune, I bet,
it would
right?
have been great to have all those
Yeah.
deals.
Yeah, I would have been reviewing my contract and because a lot of banks now, and even some operators are literally putting in a COVID clause in their contracts to.
Well, they're in most of the state real estate contracts.
Yeah.
The real
just
estate
like a
contracts. Yeah.
perpetual extension
even-
or something until the
I've
CDC
seen them. I haven't
clears.
fully read it.
Yeah, like if the end of the world happens, they get automatic extensions because it's out. It's an act of God and they can't control it.
Yeah.
Actually, to be transparent, Ryan is in town. We're doing a small mastermind, and that's one of the questions I'm going to ask our lawyer. But we got two lawyers coming. That's one of the questions I'm going to ask to either one of them of their thought process on that, because think about all the time, money, energy, and effort that you guys put into marketing for all these deals. You got them on the board. I mean, who cares about your payday? In the end, you've spent legit capital to get those deals, and now you're like, well, shit, I'm stuck, right? Yeah. So I get it. So are you guys still wholesaling today, or did you transition away from that?
So through the end of 2020, I guess, and going into 2021, my brother and I just had like a lot of, talks about what we wanted and where, what direction, and both of us wanted to move. In the process of having the wholesale company, really, we bought a few pieces of land because we wanted to develop. We were like, let's build.
Yeah.
So we still own one of those today. They were working on a 14-unit townhome. But it's been crazy. I mean, that's a big struggle right now because we own this dirt in a prime location, but the cost to build has now just exceeded almost what the price per foot to sell it is. And so that's one big struggle that we're dealing with right now. But we've had some wins through the time. But we had this time to discuss what do we want to do. And so we've both kind of shifted more toward commercial, and we still partner on some deals, but we're not tight like we were. So now I'm off doing storage, and my brother actually just started his own fund because he wants to raise $20-30 million to be able to go buy whatever he wants, right? And not have like a syndication deal where you've got a specific property to raise for. He wants to have this fund. So he's been raising.
You think what type of deals is he going to do in general?
He's interested in storage,
Yeah.
but also multifamily value add. So
yeah. I mean,
Shit.
I think
Get his ass on the plane. Get him up here.
He just left Vegas yesterday for a fund meetup.
Oh, did he go to what's his name? He's
IFG or I?
Is that ClickFunnels guy? Bridger Pennington? Was it him?
Oh yeah, he's in Bridger's group.
Yeah.
Yeah.
He's a ClickFunnels dude.
Is he?
Yeah. Anyway, sorry, not to derail the conversation. So, so you've transitioned to storage and assets that create cash flow and wealth, and I think Jason, you probably see it a lot as a lender. Is that like, I know one thing we did, we were flipping a lot of houses, and we both said, dude, this doesn't create wealth. It creates a lot of cash, but it doesn't create wealth. It doesn't create cash flow, and it actually became an issue because we couldn't predict our income long term, and if we ever wanted to leave our job, we couldn't do it. When you're looking, I guess first off, how'd you pick storage? Like, how'd that come on your radar as a way to create cash flow?
I've always liked businesses that have lower overhead than others, I guess. I'm a simple kind of guy. Like, I don't really want to have
Oh, this is where the Texas comes out. We're simple down in Texas.
Yeah, keep it simple. But car washes always intrigued me. Laundromats always intrigued me. And self-storage was always in that kind of group, right? And so that's where I think that's where the genesis of it was. And then I think I heard AJ Osborne on a podcast, or I came across his. I'm not exactly sure, but this was toward the end of 2020, and so I think January, I just put it in my goals to learn all I could about storage. It was January 2021. That's when I really started digging in. So
that's right when AJ's book came out.
So I think it was right when it came out.
That's when I listened to it. That's when I read his book too.
Yeah, I read his book then, and then I binged all his podcasts, and then I think I was in some other I think it was March or April 2021 that there was like a virtual storage summit, right? And so there was a bunch of speakers in there, and our guy Mike Wagner was in there talking.
Yep.
And so that's when I found him, and that's how I found this group with Storage Rebellion. And so, I mean, I binged. We took our family. One thing is beautiful, man. I mean, my wife has a fully remote job, and she works for Activision Blizzard, which is like a video game company, so it's very cool. I get free Call of Duty and stuff like that.
So it's Activision Blizzard. Would they merge or something?
They did,
because
yeah.
Activision was its own company. When did that happen?
Yeah, no shit.
This has been a while, and there's King too. I think there's three big companies that have merged, all gaming.
I know Activision.
Candy Crush, Wizard,
all those
Call
big
of
games.
Duty.
Oh, so you guys are really your family has legitimately destroyed society between the cigarette smoking, gaming, dude. You're on it all.
And the mortgage,
baby.
and the mortgage,
and the
crisis.
mortgage business.
So,
this guy,
the subprime mortgage crisis, everything.
I'm really a good person. So anyway,
those were all his corporate jobs.
Those
were all his corporate jobs. Those aren't anything that he.
He has not done that. No,
but we had the luxury of being because I'm in full-time real estate. You got a lot of flexibility, which is why I got into this thing. I mean, now I don't stress anymore about going to any of my kids' stuff. Like if he had a zoo field trip the other day, like sign me up, I'm in, chaperone. 100%. You know what I mean? And I don't have to think about it. Back in my old days, I'd be like stressed, like, oh man, did I ask for a day off two weeks ago, and now my boss is gonna give me hell about this? Get out of that that thing. It's just like I've made more money every year in real estate, and worked probably a quarter or less of the hours.
Yeah, I mean, we've had a few other guests on, a few that are firemen, a few that are in other corporate jobs, and it's the same thing, whether it's blue collar, white collar, corporate, trades, whatever. In the end, most people they have an aspiration to do bigger and better things, right? And I think that gets lost in translation, and obviously there was the big college epidemic of like everybody. When we were all kids, we're all about the same age. You got to go to college. You got to go to college. I skipped that piece of it, but the goal was you go to college and then you go get a corporate job and you just do your thing. You make your $100,000 a year. You live in your box and you're happy. And I think the internet and social media has kind of made entrepreneurship cool. Not that it wasn't always cool. It's become more forefront, and I think more people are willing to take some risks.
Potentially easier, too.
Let's be honest here. Ryan just, not only does he want to be able to go on zoo trips, he wants to be able to go golfing with the boys, too.
I do. I had so much FOMO back, when my brother's like, I'm playing TPC today and on a Tuesday,
that's
morning.
probably near your house, right? Because TPC is in
There's
San Antonio.
Yeah. And so those days, when I'm in my cubicle, I'm just like, man, okay. So those days, that'll get you thinking.
I always want to keep getting back to golf. Is that a public or private one? Because some are public, some are private.
I call it semi-private for TPC. They've got 2 courses out there, and they host the PGA Tour, and so.
When we were talking about Avenel, that's TPC, that course right here.
Yeah. Okay. Yeah.
Yeah, but I mean that one's straight private.
Let's be honest, a lot of business gets done out on the golf course. I mean, it's a legit.
That's why we're playing golf after this podcast.
Yeah, like it's a legit piece.
All 3 of us.
Well, John's not sitting here. I literally checking my phone to see what's going on. So, hey, man, I got a big responsibility. I brought all these guys in from all across the country to do this
They
mastermind.
want to play golf with
And
you.
I want to make sure I want to play golf. I want to make
You have
sure
a
that
golf
it's.
shirt under that?
I know, but I have my suitcase in my car, and I packed a golf shirt, and
He is hosting this thing. He feels.
I have
know what he's
responsibility.
talking about.
VIP responsibility.
Listen, you should be happy. Like, for once in my life, I'm actually being responsible. Normally, and I don't know how this podcast is turning into a therapy session for me, but
you can play 9 holes.
normally I'm just like, fuck it, it'll work out. But like this, I want to make sure people have paid to come to this event. I want to make sure it's done properly, and if I gotta do that, then so be it, and I'll see everyone at some point.
Are you gonna do it again, or have you gotten?
I've
Are
already
you
mentally
like, F
pictured.
this, I'm done doing
No.
this thing again, because playing the host, man, it's a lot.
Well,
It's a lot.
I already told you guys, like, it's a big difference for me going and being one of the boys at someone else's event and just kind of talking shit and motivating everyone versus being the guy leading the group, still trying to have that same fun, bubbly personality. And I mean, you've been a part of a lot of masterminds, but like mentally, I already have ideas for the next one. So I think that's good for all of us that let's get through this one, see what we like, don't like, and try to figure out what the next one's going to look like, where it's going to be. And to be clear, is like this mastermind, and you were part of a bigger group. Was it Collective Genius or was it a different one? Was it Ken Clothiers?
No, 7-figure flipping.
7-figure
Was
flipping.
Bill Allen and that
Bill
group.
Allen.
Okay.
Bill's
Yeah,
such
and
a
like
good
those
good
groups
guy.
do. They're
The
like,
guy- Justin before him, who he bought it from. Is like,
yeah, and look, they're there to make
Bill
money.
bought that from Justin. Justin's the one you're talking about. That was in ClickFunnels with me.
Okay.
What's Justin's last name?
Bill
again?
is Williams.
Yeah, Justin Williams and Tara Williams.
Yeah,
'Cause they were in my
Justin Terry. Yeah.
Yeah, because they were in my mastermind. They were in my
Oh.
exact group for Russell's mastermind.
Okay. I think
But
I remember.
Bill
that.
is buddies with Russell too.
Yeah.
Like they're all tight. I
Yeah.
got to meet Russell and had lunch with him with that group.
That
just
dude,
being-
that another level.
there's another level.
Yeah. But like the thing is, like a lot of those guys are doing it to make money versus like I'm literally doing this to hang out with like guys that I want to hang out with, presenters I want to hear from. I don't know why we're inviting Jason, but either way, like Jason's going to show up and talk. I probably know his speech. Was that?
He's who I came to see.
Yeah,
Well,
exactly.
and also there's a few things. Like keep in mind what the end goal is, right? Like most of our end goals are not what Russell's end goals are, right? Like
True.
billionaire, changing
Lives,
like a lot of lives, stuff like that.
Yeah.
We all have different goals, and like I talk to Ian pretty regularly, pretty much
every day. Yeah, that's how his podcast started.
And as he's been going through this, and I mean, listen, putting together an event, a mastermind's a pain in the neck. I think he set it up the right way, got the right group of people. Did it in a facility, a building that they own. So I mean, it's going to work out fine. Like that part of it. But the point is like, what's the end goal? Like, what do you really, really want out of it? I mean, we're always trying to not necessarily change things up, but like, we're like, hey, maybe we should try to add this to our business, or maybe we should try to add this. But it's like, what's the goal? I mean, I don't think I'm throwing anything out there that like one of Ian's big goals is to try to raise more capital, for his deals. So it's, do you charge a cheap price point and bring in tons of people? Do you charge an expensive price point and bring in less people but more qualified people? And I think it kind of comes down to on yours is like you're just trying to bring in your circle, which is fine, and figure out ways to make money together. Partner with each other, do this, do that. And I think that's one thing that a lot of people don't put in place. It's like, oh, that'd be great. We could host this big event, charge a few $100, we can make $100,000, and it's like that's a pain in the ass. And like, what's the real goal? And the point is if you can raise capital or you guys partner on a deal together, right? And all of a sudden, just like that,
yeah, and
huge opportunity.
I think it's also about creating a dynamic room. Like Ryan was joking around before we started this podcast. I don't really have anything. I don't really do podcasts, right? And it's like, but you do, and that's like also why you're here in this event. Yeah, sure, you might be new to storage or new to like commercial assets, but you've done a ton of deals. Your corporate experience, like, I don't care what people say. Like, I think corporate experience brings a lot of stuff that transitions, and maybe because I never had it in my life, I feel like I'm missing out on something. But I feel like you guys get like a lesson in life on like you talked about. Let's talk, again talking about like that 20-cent toggle in cigarette pricing and how that relates to storage. It's just like mind blowing to me that like you already know about dynamic pricing, whether you know it or not, and to be able to come and sit in the room and say, well, when I was here doing this in my industry, this makes a ton of sense to me. How can I relate it to your business? And we were talking on the way up here of like I don't listen to it much anymore, but How I Built This with Guy Raz. So I love listening to other industries and how they're doing stuff. How can I relate that to our business? So
Yeah.
Well,
Yeah, that's a great podcast.
And also, like, real estate's not hard. It's not. Like, it's
No.
not the hardest business model. It doesn't matter
Yeah.
if you're flipping, wholesaling, rentals, storage. Like, it's not hard.
no, we make it hard.
Yeah. But, like, running a real business and scaling a real business and being proactive and motivated and ambitious, like, that's hard. Like, that's where it is. There's so many. If somebody's successful in corporate America or successful at their donut shop down the street, they're going to be successful in real estate and vice versa.
Yeah.
Like, that's not, like, it's not a huge skill set. Like, it's something that you can learn pretty easy. And
Well, I mean, I listen to Nick Huber's podcast, and this
Yep.
guy's gone ultra successful in pretty much everything he's touched. But one of the smartest guys, I've got to meet him personally in Austin a few months ago. But yeah, he talks about real estate, like where a lot of dumb people are making a lot of money, I guess. And if you're a level up from that and you're smart, like you can kill it. Yeah.
Yep.
Dude, right now, in my opinion, is a phenomenal time for, like, I think the maybe not 80-15-5 percentage, but like the 20%ers right now are going to freaking outpace everybody. The 20% best real estate investors, real estate agents, mortgage brokers. Like, over the last few weeks, I don't think the naked eye has seen what's happened in the market, but like shit's going down. Not sure what direction it's going, but number one, retail homeowners have, their purchasing power has dropped by 20% in the last 3 months, right? 3.5% interest rates or 5.5% interest rates, 30-year fixes. Flippers, whatever inventory they have, they got to take that in consideration. I'm guessing your part of the country is similar to ours, just because I think a lot are very similar right now, that like there's still not a lot of supply. So because of that, house prices are still
Inflated,
increasing or staying up. But like, that's all real life stuff. I mean, I'll tell you, like,
something has to give.
Something has
right
to,
now.
Something has to get short-term rates. I mean, the institutional back lenders, their capital is more expensive than it was. I mean, we've been seeing over the last few weeks less volume, but way higher quality volume. And I've talked to other private lenders. I've talked to larger commercial lenders, that do the big stuff, the Kennedy Fundings, Madison Realty Capital, like that do real big stuff with private capital, and they're seeing better quality stuff, meaning that it's kind of crunch time, and a lot of the capital out there right now, depending on where it's coming from, and this is my opinion, is it's going to start drying up because there's not enough volume and they can't deploy that much capital in the asset classes. And because of that, they're going to be like, I'm not creating this model anymore. The institutional backed hard money lenders that are out there, the same thing. They want to be in an asset class, or they want to be in a model that can support billions and billions and billions of deployable capital. And I don't really see that happening. So point being, we both saw the article from Wells Fargo where they've let go 600 loan processors over the last few weeks. And they ramped up to that in previous years. But the point being that mortgage brokers, they're going to have a hard time doing deals in volume. Real estate agents. And that being said, the top people are still going to be fine. They've always going to be fine.
They will, yeah.
They'll figure it out. And it's probably even a better thing because they're going to capture that remnant deal flow. And I think real estate investing is the same thing's going to happen as well. I mean, these deals aren't going to fall in your lap. They haven't fallen on anybody's lap in years, but they're out there and they're going to continue to be out there, in my opinion.
100%. And the biggest thing is it's really everyone's dedication to the craft, right? Like the fact that you spent money to come to this event, the fact that you spent money on other coaching, right? Like
always talk about his event.
No, but it's one of the reasons Ryan's here. So everyone's probably
it's something that I had an aversion to, or like a mental block against. Really, I didn't quite get how my brother was spending this money back when I was sitting at a desk just doing my thing, and he's dropping 20-30 grand on a coach or whatever. Yeah, exactly. And I'm like, that's insane. But sometimes whatever it is, you're that will equal 5x, 10x that investment.
And I think as you grow
faster,
yep,
it's a shortcut. It's a map. It's a partner.
Well, and it's also
and
the
it's
group.
just such a great
Yeah.
like thing that's happened. I don't know what this was before. You had these like online courses and,
Yep.
or like books even,
Yeah.
like you go in my brother's garage probably from like 15 years ago, and it was like binders. You
Yep.
would go to a weekend seminar and you get these
Yep.
binders or VHS tapes or
Yep.
whatever. So there's always been doing it, but the internet and Brunson and ClickFunnels have
Yep.
and YouTube, I think all these avenues and
easier.
podcasts have made it just like
Well,
like
and
hockey
also,
sticked it.
the content's for the most part free, right? Like you can get the
Yeah.
education and the content anywhere you look. You
Yeah.
can pay for it, you can get it for free,
Right.
But it's the way that it's communicated to you and kind of the. I also call it like you need to have the aha moment that you're ready to do this and
The
you're ready to
epiphany
commit to it.
bridge.
The epiphany bridge. That's the way that Russell says it, because things that you could kick yourself in the head because you were like, wow, I was in my brother's garage and like it was right there. Why didn't I know to pick that up and read that? If
Right,
I had read it
yeah.
a year earlier, like you weren't ready a year earlier.
Right.
Like you're in that in that transition. I mean, we'll do some private consulting, and we have a mastermind group for private lenders all over the country, and they're all in different places. So as the guy who runs it, it's challenging because this person's not ready for this content. This person's not ready for this content.
Oh,
this content,
go on. Oh, you have responsibilities. Go on.
this content is whatever, too dumbed down for this person over here. So I don't know. It's
One of the biggest lessons I've learned or thing I see in people in real estate, I guess, is really just executing and doing it. Because you can sit here and listen to all this YouTube University for free, which I did. I soaked in a lot, but then
Yep.
I'm like, I just got to do it, And I come across now a lot of people that are like, they're just asking question after, and it's like, just go do one, and you'll answer all these questions. Just you got to do it.
education versus execution.
When we used to run a local event here in person, you would see the same people coming through asking the same questions but not taking any action. And it's like, well, how can you do that? And like when I started studying to do my pilot's license, I started doing all this stuff, and I started doing the course, and then I was like, I got to go fly, because like none of this makes sense until I go do a deal. And look, there's analytical people out there, and we've talked about this before, is like understanding your personality type, and until you understand that, you don't know where you're going to be weak or strong.
Yeah.
And once you figure that out, you need someone else to motivate you to do your weak stuff so you can go do deals, And that's why me and my business partner work well together. Dan and I. Sorry, I'm never good with that piece of English. My wife always makes fun of me. But it's like
You have to say it separately to see if it makes sense.
yeah, I'm not going to do that anyway.
Like, I'm not good at business. Me not good at business. That's why it's high.
I know.
That's
See,
how somebody explains
this
it
is
to me.
why I don't do emails on a daily basis, because my copy is so bad. But seriously though, like Dan motivates me to stay grounded and not go completely wild, and on the opposite, I motivate Dan to go a little bit out of our comfort zone, and that's how we end up where we are today. And we're good checks and balances. And I think it's hard. I mean, are you an individual operator right now?
Yeah.
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 So
My next stage is to like hire for my weaknesses, really, because there's certain things that get me fired up, and there's certain things that are kind of a roadblock because I don't really want to do them as much.
I see you as the deal guy, getting the thing going, being like, all right, here's the game. Now someone go operate
That's
it.
always what it is, though.
Yeah.
At
Yeah.
the beginning, right?
Yeah.
Because that other person would never be doing that.
Exactly. 100%. So
I mean, so I bought this facility in January, my first self-storage deal that I did, and I actually enjoy operating it right now because I'm like fielding every phone call just to see.
Learning.
I want to
You
know.
don't-
I want to
yeah,
know.
you need to know it.
Yeah, I need to know exactly what's going on and how many calls are coming in. Because if I hire somebody and they're like, I'm inundated by this or this is happening, I'm like, no.
Yeah.
They say like big boy entrepreneurs, like the biggest entrepreneurs, like they don't know what's going on individually and don't really care because they just hire around it, they throw money at it. But I am complete opposite. I think we're all complete opposite of it. It's like I'm doing the nitty gritty crap at the beginning because, like, in my opinion, it's like, well, how can I train someone else to do it?
Exactly.
Or how can I, I don't even know what software to buy for it. I don't know who to train, internal or external, until we do it all. So that self-storage facility, how many square feet was it and how many units?
It's 81 units, and it's a little over 15,000 square feet.
So that's a real good size
Yeah.
first facility. And when you bought it, how occupied was it?
It was 100% occupied.
Perfect.
I couldn't have landed a better deal to buy for my first one. I had 3 under contract at one point. 2 of them were not deals I wanted to close on, so I attempted to wholesale them, but they were also just not. They were in very rural markets that people, for one reason or another. But I got a good jump on like my attempt at wholesaling.
Right.
2 deals, but this one I knew the owner was like on point. He had good records. He just was way below market on his rates. It was small town Texas kind of stuff that you see all the time. That people, operator just, he's had it for 20 some odd years, and these are all his friends almost that are renting there. And he's like, I'm not going to give Miss Johnson a $5 rate increase. She's been here for 20 years. So,
I'm happy to, sir.
but I said,
I'll be the mean guy. Don't worry about it.
So I found this deal by cold calling, which I dedicate about 6 hours a week to cold calling.
Phenomenal.
And I came up with a lead source that has the deal I just wholesaled last Friday. We closed on that one. I think it was my 5th call from this list. And that turned into like $50,000, So it's like it's just doing, you know what I mean? Not a lot of people, not a lot of people want to do the 6 hours on the phones that I do every single week.
Well, that's the difference. We should talk a little bit more about that storage before we wrap up, but that's exactly right. Like, in a market like this, they're not doing. They're going to be like, oh, my real estate broker didn't send me any good deals.
Sure.
That means the market sucks and I'm out of the game. Yeah. Like, that's what will happen right now. Guess what? Your 6 hours of cold calling might turn into 12 hours of cold calling because that's what it takes to do. Like, when we're in markets like this is the time that you ramp up marketing and you double down on that to find the best of the best of the best, because that's what it is.
Yeah.
In other markets, crazy markets, typically you're getting tons and tons of deal flow, but you're spending time on weeding through them. Now I think it's going to be less deal flow, but the deal flow is going to be more quality.
Yeah,
I think at least that's kind of how I think it's going to relate.
Well, and as the market starts to transition now, as cap rates meet what the market is potentially going to, there's going to be this slack where brokers have a bunch of deals that are overpriced and they're not going to know what to do with them. They're going to let them go. And if you're marketing at the same time, then they're going to have an unhappy experience with the broker. I'm going to raise my hand right now. We're in the process of potentially 1031ing, and I've been hammering all my brokers saying, well, where are the deals? And they don't have the deals because I'm looking at one thing, they're looking at another. I'm like, God damn it, I should have had my marketing machine going. And I'm one of those guys that aren't doing my job, so I'm going to get back out there and knock it out. So you got any more deals to wholesale, let me know.
I just contracted one, so.
All right, well, we'll talk. I'm glad you came in early today.
It's like
golf course.
It's 17,000 square foot.
Yeah.
Climate control.
They got beers there. Let's lock it up.
Yeah.
I really want to talk to you guys about this deal, though, this week at some point. Just in terms of...
We can only talk between 12 and 4 today.
Well,
yeah, when we're on the golf course. He's trying to be
because
a dick.
I'm still testing a lot of assumptions, and, I'm still earlier days, and so bouncing certain, like actual deals with numbers off with folks, and so that's what the beauty of just getting together with guys and having a network to be able to call more experienced investors.
Did that deal that we've been talking about, did that cash flow from day one?
Yeah, the one I just bought. Yes. Yeah.
Which is great. That's the beauty of it, because it's like I'm making money right now.
Like numbers on it,
immediately.
So, yeah, everything immediately. It was a no-brainer deal.
Yeah.
It had good, like I said, it had good records. It was full. It was just below market rents. Now, if you look at all the metrics, it's in a small town, right? There's only like 4,000 people there, but it's conjoined. Like if you take in Texas, a lot of times you got to go out like 10 miles because these people drive into these smaller towns to do their grocery shopping and all that good stuff. And so there's it's like 23 square foot per capita. But everyone's full. So you got to look at the entire picture. And so I thought, okay, I'm gonna buy this thing, and I've been full, the last few months. Every time if someone moves out, it's full the next day. And so
excellent.
I've implemented all the software. Yeah, and the prior owner had a 60-day, all the old leases that they were on, 60-day notice on a rate change. So I sent that out, and so just May 1st, it all went up, and I had one guy tell me, I'm moving out. This is garbage. You going up $10, and I was like, yeah, all right, thanks for your business, Mr. Ruiz. I really appreciate it. And then the day he was supposed to move out, I sent him a text through ESS, and I'm like, hey, just shoot me a picture of the empty unit. He's like, I'm going to stay.
Yeah, I know you are.
$10. It's like,
so, yeah, just
you know how hard it is to move all your shit out for $10?
Yeah, well, that's the thing. And he knows that there's nothing else in the marketplace, and anything else in the marketplace is going to be considerably higher, assuming
I'm
everyone
still
else.
$5-10 below every competitor who's already full, by the way. So
keep driving rates, because at a certain point, not only are you going to dynamically price against the market, you're going to internally dynamically price. And I don't know if Circle K ever did that, but like guys ever look at like your dedicated customer base, and it's like, well, they're not going to go anywhere because they're always coming to Circle K because they're getting fuel, and they're always going to get. Yeah. So it doesn't matter if your fuel is a little more, or whatever the metric is, but it's the same thing with storage of like. Yeah. You're internally fighting yourself at that point because your marketing machine's going so good and you're getting move-ins, you know?
Mm-hmm.
Is it true at Circle K and places like that the gas pretty much breaks even and you make all your money on convenience?
No, they make a ton of money on gas. I mean, if you're a one operator, store, maybe, but you still want to make a few cents a gallon.
Yeah, but the margins on the convenience are significantly higher, though, right?
Yeah, the margins are good, but it's both. You want to have both. I mean, and I always thought the interesting dynamic was when prices. It's a reverse. When prices are going up at the pump, they're making less money. It's when it starts going down because you can.
Oh, they're holding higher and taking longer to come down.
Longer, yeah, exactly. And so, when you think, oh man, they're making so much money because everything just went to $4 a gallon, it's like they're struggling too.
But it's the same way in storage. I mean, think about it, right? Like you drive prices up to the point where everybody's paying a higher price, and then it's slower to lease up, so you're just kind of chasing it back down until you get that fish to bite, and then you keep it moving. Exactly. It's the same thing.
Well, what's the markup on tobacco? Because that's regulated, right? Like is that a big profit center for those places?
Yeah, I mean, honestly, my category, all of tobacco, dip, cigars, everything was. I think we were 35% of inside sales.
They're in Texas
as a single category, but
the Marlboro, man.
I don't even know people that smoke anymore, to be honest. Like cigarettes, at least. Like, back in the day, a good percentage of people that you knew smoked.
A lot more than you.
Very rare.
It's 3 to.
Maybe not in Texas, but
it's about a 3.5% decline in smoker population every single year.
Yeah,
and so what's crazy is that for Altria and RJ Reynolds to keep their top line going, they do 2 price increases every single year, like clockwork. Like it's coming, and then that was two big parts of my year. Those were like my tax season almost. I had to put through all these cost increases from the manufacturers.
Well, we covered a lot in this episode. I will ask you one other thing. I know you're a podcast guy. I don't know if you're a book guy. What's your go-to podcast or book right now?
Right this minute, I'm listening to a lot of Nick Huber stuff.
Okay. Sweaty Startup, right?
Well, he's got his Sweaty Startup, but then his actual Nick Huber show.
Okay.
I don't know why he delineated, but I think his Nick Huber show is more on the storage side and the syndication, kind of syndicating deals, and so I really enjoy that.
Have you caught him on Chris Powers episode?
Fort, yeah.
Dude, I'm so deep on that Fort podcast.
Yeah, I like Chris Powers
so good.
too.
I'm going to get him on here.
And he's in Dallas, so he's a Texas guy. So
yeah.
I transitioned a lot. When I first started, everybody's like bigger pockets, so I was listening to Brandon Turner and those guys, and then now I'm just deep into a whole bunch of other ones. Capital Hacking is another one that I like. Those guys. What is it? Road to Millions or something with Sam Parr and those guys. Anyway, there's some good ones out there. A lot of good podcasts, including this one.
Yeah. Yep. See? Real Estate Reserve podcast. He'll listen to this one now.
Yep, it's number 1.
Yeah, number 1.
Real estate investing.
Especially in Maryland.
Yeah. And, a book that I read last year, though, on book side, Tax-Free Wealth by this guy.
Mark Kohler.
No, Wainwright.
Oh, yeah, Tom Wainwright.
Wainwright, yeah.
Me too. That's what I told you.
That one.
You get his download.
Shifted.
Did you read it or listen to it?
I read it. Yeah.
So I listened to it. Then I got the download PDF which is good. I still have it on my computer, and I looked
Nice.
at it.
Yeah.
What was a good takeaway from that you had?
Really just the mindset shift of, like, years ago, I'd be like, man, these guys don't pay any taxes. They're not paying their fair share. And that was like, I didn't quite get, in the first chapter of the book.
I can
really,
understand that. I mean, what if you don't own real estate?
if you don't know it,
If you don't know, you don't know. He's part of Robert Kiyosaki's. Like, that was a
Yes,
Robert Kiyosaki.
he is
Rich Dad book.
Yeah, it is. Yeah. But
I enjoyed
but
it,
when
too.
you shift your mindset to say, like, the government has these programs to do certain things because they want you to do them, and so they're going to incentivize you to do them. They're trying to tell you it's okay if you don't pay any taxes when you do these things. And I was that's 1,000,000% right. So
and also the mindset of getting into deals that have tax benefits. That's always been the downfall of the only downfall of private money lending is the way it's taxed.
It's ordinary income.
Only downfall. Yeah, it's taxed as interest income or ordinary income, and it's
that's why we need my president to get back in.
You need to get a
that's not changing.
No, we need my president to get back in because he was a real estate investor, and it bodes well for all real estate investors.
Wasn't a private lender.
Yeah, well, you find yourself a private lender to become president.
No one's changing that.
Well, hey Ryan, where's the best place people can find you? If you want them to find you, if not, you can just go right off into the sunset.
They can find me. I've got my name, Ryan McLeaird. Pretty easily to find me on Facebook or Instagram, The Real Ryan M. Or I've got my Realtor Ryan TX on YouTube, IG, and Facebook.
All right.
Those are I got a separate kind of just on the real estate.
Right on.
Sweet.
Put them in the show notes. So thanks for coming on, man. We really do appreciate it.
Yeah, thanks, guys. I
appreciate it, Ryan.
Enjoyed it.
Hey, his over-under was, 30 minutes, and he went for 50 minutes. So look at you. You had a lot to say.
Man, yeah. All right.
Fair
Thanks,
enough.
guys.
See.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.